Imagine waking up this fall and suddenly everything around you, your groceries, your rent, even your everyday shopping, costs significantly more. Goldman Sachs is warning us that this scenario isn't just possible, it's very likely. And the reason? Tariffs. But here's the twist. While Goldman Sachs says prices will rise, President Trump disagrees. Who's right? And more importantly, what does this mean for your money, your savings, and your investments? In today's video, I'm breaking down exactly what Goldman Sachs predicts about tariffs and inflation, why this matters for the US economy, and how it could impact your wallet. By the end, you'll not only understand what's coming in late 2025, but also how to prepare yourself financially so you're not caught off guard. Goldman Sachs released a study saying Americans should prepare for higher prices this fall due to tariffs. President Trump didn't like that. He fired back, saying, "Tariffs haven't caused inflation or any other problems for America, other than pouring massive amounts of cash into our treasury." And then he mocked Goldman Sachs, suggesting their CEO should just stick to being a DJ rather than running a financial institution. But Goldman Sachs stood firm. "We stand by our research." So what's in this research that has created such a big debate? Let's break this down simply. Imagine you're a business owner in the US and you import products from China. If an item costs you $100, tariffs could make it $150. So far, according to Goldman Sachs, US businesses have been absorbing about 64% of those costs, reducing their profits instead of passing everything on to customers. But here's the catch. Goldman Sachs now says businesses can't keep absorbing those losses. By fall, businesses may only cover 10% of the cost hikes. That means the other 90% will hit consumers directly. In other words, you and I will feel it at the checkout counter. You might think tariffs only affect importers, but here's the surprising part. Even American-made businesses could raise prices. Why? Because tariffs reduce foreign competition. When foreign goods become more expensive, local companies face less competition, and less competition means they can raise their prices too. So even if you're buying an American-made product, you could still be paying more because tariffs push the entire market upward. Goldman Sachs says, don't panic too much. They believe this inflation will be transitory. In simple terms, they think it's a one-time adjustment to higher prices. But here's where things get tricky. The Federal Reserve, the central bank, has to balance two things: keeping inflation under control and supporting the economy and jobs. Right now, the Fed is more worried about the weak job market than about tariffs. That means they might even cut interest rates to boost the economy, even if that makes inflation a bit worse. Interest rates are like the oxygen of our economy. Lower interest rates encourage borrowing and spending, good for short-term growth. But they also make inflation worse. That means if you have debt, lower rates could help you. But if you're just saving cash in the bank, inflation will quietly eat away at your money's value. And here's the golden rule. Inflation makes investors richer and savers poorer. If your salary doesn't rise as fast as inflation, you're effectively earning less. If your savings aren't growing faster than inflation, you're losing purchasing power. But investments, like stocks, real estate, or inflation-protected assets, often rise in value during inflation. This is why thinking like an investor isn't optional anymore. It's a survival strategy. So let's connect the dots. Tariffs are coming, and by late 2025, you'll likely see higher prices everywhere. Businesses, both foreign importers and American manufacturers, are going to pass the costs on to you. Inflation will rise in the short term, but the Federal Reserve might ignore it to focus on saving the job market. Lower interest rates could stimulate the economy, but they'll also push more people toward investments rather than savings. Here's the bottom line. The game is changing. Tariffs aren't just a political debate. They're about to impact your day-to-day life. If you want to protect your money, don't rely only on savings. Start thinking like an investor. Be aware of which industries benefit during inflation. The winners will be those who adapt, and the losers will be those who ignore what's happening. So here's my call to action for you. Don't just watch this video and move on. Take one step today, whether that's learning more about inflation, adjusting your budget, or starting to invest. Small actions now can save you from big financial pain later. If you got value from this video, hit that like button, share it with someone who needs to prepare too, and don't forget to subscribe so you never miss my future breakdowns on money, the economy, and building wealth in uncertain times.